Manikanta? Hello, Mr. Manikanta. Okay. Now we are solving question problem number 8. See, first I will read the question and then we'll understand and then we'll go forward. First, Manikanta, you joined? Hello, Manikanta. Maybe joined Manikanta. Okay, let's go. Question number 8. RAM Limited acquired 60% of ordinary shares of 100 rupees each of Krishna Limited on 1st October 2001. On March 31st, 2002, the summarized balance sheet of the two companies were as given below. RAM Limited, Krishna Limited. Property, plant and equipment, land and building, plant and machinery, investment in Krishna Limited, inventory, financial asset, trade receivable, message box. Okay. So, investments in Krishna Limited, inventory, financial assets and trade receivable, cash, total, equity and liability. Equity capital, shares 100 rupees each fully paid. Other equity, other reserves and surplus, retained earnings, financial liabilities, bank overdraft, trade payable. The retained earnings of the Krishna Limited showed a credit balance of 16 lakhs on 31st March. Okay. Go ahead. The retained earnings of the Krishna Limited showed a credit balance of 60,000 on 1st April 2001, out of which dividend of 10% was paid on 1st November. RAM Limited has credited the dividend received on its retained earnings. See, first of all, when the date of acquisition is 1st October 2001. So first we need to note down that, because at the end you may not remember all the things which you read. While reading itself, we need to point down what are the remember points, important points. See, first working note number 1, identifiable points, notable points. First, what is that? Date of acquisition. 1st October 2001. Okay. Next, date of consolidation. 1st April 2002. Next, or 31st March 2020, 2002, maybe 31st March 2002. Like that also can you call. Date of consolidation 31st March 2002. Okay, 31st March 2002. Now, date of consolidation is 31st March 2002. Now, come to the points. How he acquired 60% of the shares, 100 rupees each. 100 rupees each. So, if you see that movement, equity share capital 100 rupees each is fully paid. 4 lakhs. See, for example, if you consider Krishna Limited, worth of the equity share capital is 4 lakhs. The worth of the 4 lakhs equity share capital, you can compute how many number of equity shares was outstanding. So then come back to the equity shares of outstanding, then 4 lakhs equity share capital divided by 100 rupees each, then how much is coming? 4 lakhs divided by 100 rupees. Then 4,000 equity shares come up. Okay. These 4,000 equity shares, how much we acquired? 60% into 60%. That's called into 60%. So 2,400 equity shares is parent company. Whereas non-controlling interest equity shares is 40%. That is equal 4,000 into 40%. 4,000 into 40%. 1,600 equity shares. Dear friends, the most and foremost important thing is the moment you know the date of acquisition, we need to, for example, in the year of the beginning, it was acquired. There is no much more ambiguity regarding to your reserves and surplus and general reserve and return earning. Mostly important thing is here, while doing the consolidation, you need to understand how you need to segregate and give impact reserves and surplus and retained earnings. These are two elements are the much more important thing. How we need to segregate reserves and surplus. What are the elements we need to give impact in the reserves and surplus? General reserve. So it is much more important thing when the date of acquisition. And the date of acquisition, what is the balances available in the reserves and surplus? What is the opening figure? What is the during the acquiring figure? And the date of consolidation, what is the figure? So, entire magic in the consolidation is deals about other equity, and that's called other equity. That's it. In other equity, two components. One component number one is reserves and surplus. Component two is general reserve. In that component, again, if you segregate, one is securities premium, another one is capital, another one is general reserve. These three, securities premium, general reserve, other capital reserve, these three components only entire impacting either goodwill or maybe intercompany reconciliation, like debtors, creditors, maybe intercompany woes, and any revaluation profits, and any plant and machinery, any land and building during the year, any kind of stuff, upward or downward revaluations, all these you need to give impact in the that reserves and surplus column. We'll see somebody messaged me with their comments. Let me go through their comments. We'll see what they commented. Where I can see, just 1 minute. Okay, I'll see later, no problem. First, let me go deliver the speech. See, the most and foremost important thing is we are going to deal about security premium, general reserve, and reserves and surplus. While dealing these three, there are few steps over there. The first step is what you need to compute first. What is the date of acquisition? What is the date of consolidation? The movement of the date of acquisition and date of consolidation in between any plant and machinery upward or downward revaluation, that you need to give impact in the reserves and surplus. And thereafter, the consideration paid you need to compute. While computing the consideration also, what are the value you are going to pay that, and future what you are going to pay that, you need to bring into the present value of today and give impact. And in case for that any interest rate is applicable, we need to compute difference payable of interest consideration also need to be considered. Then during your calculation, so the consideration you are going to pay, and then add future you are going to pay that one, and the interest portion will be coming to the current liabilities. So that also you need to give impact. Now we'll go by step, dear friends. The question is already I shared with Manikanta and some other guys who are maybe not seen this question. If you kindly raise the question, or you can call me through my mobile number is 9677205265. I explain the question and then we'll go to the answer. This is for the CA final student, well-known question. The question name is Ram Limited and Krishna Limited. This question, okay. Now the so if you want, I'll explain the broadly first and then I'll come back for the solutions. I'll do solution. See, we need to always first working notice, you need to understand, especially regarding to plant and machinery, it's maybe upward or downward, you need to give impact. Regarding to upward revaluation, going to be added to the general reserve, or maybe it's going to be added to the reserves and surplus. That's called opening itself. And correspondingly, any depreciation to that extent, it will be going to be need to be the impact on the post profits. After that, you need to go computation of the statement of net assets. Statement of net assets may be two kinds. One is PNSA, proportionate net sharing assets method. Another one is fair value method. So these two things, the statement, step one, you need to compute statement of net assets in the subsidiary company. In that subsidiary company, you need to incoming voice call from Manikanta. దానికి వచ్చేసారు దేవుడా. సర్లే, లెద్దాం. ఇప్పుడు కన్సిస్టెన్సీ ఉంటే అర్థమైంది చాప్టర్. జస్ట్ లైక్ దట్ వచ్చి వీడియో చూసిపోతే ఎలా అర్థమైంది చాప్టర్. సరే, కానీ ఇప్పుడు మనం ఏం చేయాలంటే, మనకంట యూ ప్లీజ్ లిసన్, అదర్స్ లెఫ్ట్ నో ఇష్యూ, ఓకే. సరే, నీకు ఫస్ట్ నేను స్టెప్స్ వివరించి తర్వాత లైవ్లోకి వచ్చేస్తుందా నీకు? ఎందుకులే, ఇంక లెక్క చేసేద్దాం. మనకంట డూ యూ హ్యావ్ ఎ సమ్? నో. సో వీఆర్ గోయింగ్ టు ఎక్స్ప్లెయిన్. ఫస్ట్ వన్ హియర్, because other peoples are there in YouTube. First, I will be going to broad explain, and then I coming back to the solution. I'll do step by step. See, according to my understand, the gambling of consolidated balance sheet preparation, according to India, is you are going to talk, you are going to deal with many adjustments regarding to one is security premium, another one is reserves and like capital reserve, general reserve. These three elements. The moment you entered into the problem, you identify, and that you need to identify the opening balance of capital reserve, general reserve, or security premium. And then you can come back to the problem. You need to understand the problem, like what is the date of acquisition. The date of acquisition is the beginning or in between. So in case of beginning, you need not much worry about time ratio with respect to the reserves and surplus in the beginning figure. Whereas in case of it is the middle of the year, you need to understand that, you need to compute that what is the pre-acquisition profit, what is the post-acquisition profit. So the date of acquisition, what is the profit is there, and after date of acquisition and before consolidation, what much of the profit you generated. That profit you need to be segregated into parent company and subsidiary company, because during the consolidation you are going to give impact. Some portion you need to add to the non-controlling interest. The remaining portion you are going to add to the parent other equity portion. So security premium, general reserve, capital reserve, these three elements you are going to computation. What is the pre-acquisition, what is the post-acquisition. I don't bother about the pre-acquisition because pre-acquisition pertaining to the subsidiary. I don't mind. Pre-acquisition profit will help to me the value of the net assets of the subsidiary. I don't mind that. I am worrying about what is a post-acquisition profit. That post-acquisition profit, because I am the middle of the year, that will be, I need to be segregated. What is the parent portion? What is the NCA portion? Because the moment of computation of the goodwill, I am going to compute like this. How much amount I am going to pay to the subsidiary company, add non-controlling interest, then total amount, less the fair value of the subsidiary company. So friends, this is the step you need to do. And then once you computed this step, how will come? First, you need to compute statement of net assets of the subsidiary company. So here what impact? For example, you take share capital. Same share capital will be here and there. In case if you issued equity shares to the subsidiary, that will come on to the post, and then the date of consolidation will be added to those equity number of shares. Then if you come to the other reserve which is available in the opening, I will take into date of acquisition itself. And in case any post-acquisition reserves, I will put into the post-acquisition period. Then I will take retained earnings. Other reserve I taken over. Retained earnings I'll take it. Retained earnings I'll take what is the opening balance. And in case closing figure given, opening figure minus closing figure, any between figure, I need to put into the post-acquisition profit. And in case dividend declared by a so in this question I'll read it and then I'll give you impact. The retained earnings of Krishna Limited shows credit balance 60,000. What I need to do? This I need to add while computation of the net assets of the subsidiary company as on the date of acquisition. Okay. Now, of which dividend 10% was paid on the 1st November, Ram Limited has credited dividend received to its retained earnings. Okay. Of which dividend 10% was paid on what? 1st November. Dividend declared by a subsidiary company. How much? For example, equity share capital of subsidiary company, how much? 4 lakhs. 10% dividend means what? 40,000. This 40,000, what happened? He was declared. 10% was paid on 1st November. Now, if I paid on 1st November, already existing post-acquisition, I need to add back, right? in order to compute the actual post-acquisition profit. So I am going to do that. I'm adding. Then I will add that 40,000 to the post-acquisition profit. Now, in this problem, if you see, I'll give impact of this problem adjustment, and then I'll also explain you entire story of the consolidation, what happening to the step by step. Kindly patience the people, be in the line and then listen. Then you will understand the entire picture of the consolidation. If you just like that comment going, you may not get the full picture of the consolidation. Now, Mr. Manikanta, you are be there online. I shared with you question. You please follow, and then we'll, accordingly we'll solve. Now, RAM Limited has created dividend received and returned earning fair value of the plant and machinery on 1st October 4 lakhs. The rate of depreciation of the plant and machinery is 10%. See what is telling, fair value of the plant and machinery on 1st October was 4 lakhs. But whereas if you go into the balance sheet, you see the what is the property, plant and equipment, plant and machinery value is 2,70,000. Friends, understood? The plant and machinery value was how much? 2,70,000. What is telling, fair value of the October 2001 plant and machinery was 4 lakhs. How much revaluation done? 2,70,000 minus 4 lakhs. So 1,30,000 is appearing to me as a revaluation. Okay. So I will give impact that also. Just let me come back first one. In case of parent, according to I shared your question, my dear friend Manikanta, you see 4 lakh share capital, 2 lakhs is reserves and surplus, whereas post-acquisition return earnings is 1,04,000, because 1,64,000 return earnings is the closing figure of the subsidiary company. Now that between figure was 1,04,000, but it is not a correct profit because there was a dividend declared was happened. So that if I added back to that, and then I am getting 1,44,000 is the correct profit for the 12 months. Okay, friend. Okay, friend. Now, if I segregate into time ratio this 1,44,000, 6 months is pre-acquisition, 6 months is post-acquisition. So that the date of acquisition, I can add back to the pre-acquisition profit such as 72,000. I'll bring it back to the date of acquisition profits. Now, if I go revaluation, what is telling, the date of the plant and machinery was 2,70,000. Okay. Now, the capital asset on the plant and machinery, how much is showing? 2,70,000. So, depreciation for provided for the current year, how much? I might have 2,70,000 is the balance after depreciation. So, 2,70,000 divided by 90%, then 3 lakhs is the plant and machinery of the beginning of the year of the date of acquisition. Okay. Dear friends, sorry. The 2 lakh will be the beginning of the 1st April 2002 maybe. Okay. 1st April 2001. Am I right? 1st April 2001 is the 3 lakhs. Now, for this 3 lakhs, what happened? One more plant and machinery, revalued plant and machinery. Now, for this plant and machinery, I need to compute depreciation for the 6 months. Because why I am doing for 6 months? My date of acquisition is the middle of the year, 1st October 2001. So, I want to know my plant and machinery, what is the value of the 1st October 2001. What is my plant and machinery value 1st October 2001? I need to know that. Then, for that what I did, I computed depreciation for the 6 months. How much is coming? 3 lakhs into 10% is 30,000 into 6 by 12, then 15,000 is coming depreciation. Then for minus 3 lakhs, then 2,85,000 is my fair value as on 1/10/2001. So this 2,85,000, what I need to do? I need to consider fair value for the date of acquisition portion. Am I right, friends? Now, in order to know what is the revaluation made as on 1/4/2001, which as on 1st October 2001, in order to know to give impact of reserves and surplus of the 1st October 2001, I want to know what is the revalued figure. So to know that revaluation figure, what I need to do, my as of today 1st October 2001, my plant and machinery should be 2,85,000. But he is telling that as on plant and machinery, as on the date of 1st October 2001 is 4 lakhs. The question is given. What is telling? The plant and machinery value was 4 lakhs, not 2,85,000. So that I need to understand that 4 lakh minus 2,85,000. Then the revaluation profit, what will happen? 1,15,000. So you consider, my dear friend, please take calculator. 4 lakhs minus 2,85,000, then 1,15,000 is the revaluation of the profit, plant and machinery. What I need to do this revaluation profit in order to compute other equity as on 1/4/2001, I need to consider this 1,15,000 revaluation profit. Then only I comes to know the what is the picture of as of the 1st October 2001, which I am going to acquire the subsidiary company. As on that date, what is the impact is going to be revaluation surplus into my general reserve or maybe capital reserve. I may be capital reserve. Now I'm going to add back is the 1,15,000. Thereafter, what happened? We need to see any other adjustments over there. Yes, is there. What they said, in order to find the fair value of 1st October 2001, not only give him impact of the plant and machinery, any other assets is revalued, because I'm going to compute net assets not through assets and liabilities route. I'm going to compute through capital route. That's why I want to give everything impact into the my reserves and surplus of capital reserve, my general reserve. So I want to bring into the full what is the amount exactly pertaining to the 1st October 2001. So that what I'm going to do, I'm going to see the other assets, what is going to impact my opening reserves and surplus, capital reserve, securities premium. Now I'm come back to the seeing the points. Trade payable is at 20,000, whereas in the beginning question, trade payable is 34,800, whereas 1st October 2001 it's showing how much? 20,000. So you imagine what might have happened, what might have done. My closing figure is showing 34,800, whereas 1st October 2001 is showing is 20,000. So you see what might have happened. My trade payable, I am telling, on 31st March 2002 is 34,800. But my question is given, my trade payable as on 1st October 2001 is 20,000. Then what you need to do? This trade payable, okay, this trade payable revenue loss due to trade payable is what? How much is 20,000? Yes, this 20,000 you need to give impact on the date of acquisition for the 1st October 2001. So what I'm going to do, 20,000 I'm going to reduce for the computation of the net assets as on 1st October 2001. Listen, my friends. Next, my friends, what happened if you consider, if you see the land and building and the inventories, land and building is showing 2 lakhs, whereas my land and building as on 31st March 2002, my balance sheet showing 2,70,000. Then what might have done? What might have done? The land and building, the land and building is 3,60,000. Land and building was how much? 3,60,000. Whereas 1st October 2001 is 2 lakhs. So the revalued figure of 2 lakhs, what I need to do? I need to consider as on 1st October 2001 for computation of the net assets for the date of acquisition. So that what I did, 2 lakhs also added. My friend, 2 lakhs also I added. What I did? 2 lakh also I added. Now, revaluation profit in stock. This 30,000, see, you need to understand the question. Following are the increase in the fair value as per India's from book value of on 1st October 2001, which is to be considered while consolidating the balance sheet. That's what question given. So for that, what I did, whatever they provided, they're telling increased value. Due to that, I'm considering it is going to impact my reserves and surplus. I'm taking as this adding figure. That's what land revalued figure increased I'm taken. Stock revalued figure increasing I'm taken, as well as trade payable increasing I'm taken. So then I'll compute here also. My people are allow me to write because I'm telling you, and if I write also clarity will comes to me, right? So that I'm doing. Let me do that on the paper also. My dear Manikanta, you please write on the notebook. If you have any doubt, please call me. Manikanta, you're writing or not? What is somebody written to me? What is this? Samir Sharma, MACT claim case, guilty of part is going to Supreme Court. Sir, okay, bah. We'll see later what their comments. No issue. We'll see their comments later. See, my friends, we'll competition. Because who are in the live, you also take one notepad and then write down and do the calculations. Then only you will get a pure clarity. Otherwise, you won't get it. So next time I'm coming for consolidation, solving the sums. I'm going to bring the question before you and then solve. Now, Manikanta, you please solve it. I'm also solving. Step 1. So otherwise, first I'll explain to you and then I can write on my notebook, right? That's also, I'll explain you first. So next, if I take post-acquisition, what I said, 1,44,000 was the correct figure. This 1,44,000, what I did, 72,000 I brought to the date of acquisition. Remain how much is there? 72,000 is there. Okay, remain 72,000 is there. Now, so depreciation, how much we need to consider? 4 lakh into 10% for 6 months, how much is happened? 20,000 will come. Whereas the actual value, how much? 3 lakhs they're telling, right? 3 lakhs into 6 months, what happened? 15,000 will come. So because of revaluation, how much depreciation increased? 5,000. 20,000 is a revalued figure depreciation. 15,000 is a book value depreciation. Because of this revaluation, how much impacted my depreciation? Increased. 20,000 minus 15,000 is a 5,000. This 5,000 I am going to give impact in my post acquisition profits. Then 72 minus 5, then 67,000 I arrived. Now this 67,000 I am going to segregate what is pertaining to the parent company, what is pertaining to the subsidiary company. This will help to me while computing the other equity of the parent company, while computing of the non-controlling interest of the subsidiary company. This figure will help to me adding their other equity portion. So that now if I take 67,000 into 60% will be 40,200, 40% will be 26,800. So now you understood by computing the post-acquisition profit segregation. And you also arrived net assets of the as on date of acquisition of the subsidiary company. So you arrived two figures. which is going to help you computation of goodwill as well as computation of other equity. Now, going to step 2, computation of the goodwill. I'll look into going to my balance sheet. What is my investments in Krishna Limited? Yes, I invested 8 lakhs. Yes, 8 lakhs is my 60%. And then, according to Ind AS 103, what's telling that Ind AS 103? Is telling that add back non-controlling interest portion. That is how much percentage? 40%. And then 40% corresponding, if I see date of acquisition, what is the net assets of the subsidiary company into 40% as my non-controlling interest, I'll add back. Then the full value will come. From there, I will reduce my net acquisition of the as on 1st October 2001. Then what will come? Full goodwill will come. Full goodwill will come. My dear friends, understood? Now, next, step 2. What is meant by step 2? Step 2, I am going to understand what is the portion of non-controlling interest. As on date of acquisition, my non-controlling interest will be the 4,22,800 because of 40% of the net assets of the as on 1st October 2001. Now, I need to understand. To getting the figure for the consolidated figure as on consolidated balance sheet, 1st March 2003, 31st March 2003, in order to compute that figure, I need to add back for the non-controlling interest is the share of acquisition of the profit of the post-acquisition profits. What are the post-acquisition profits, my dear friends? You see, 67,000 into 40% is the post-acquisition profit for the non-controlling interest portion. Non-controlling interest added to the non-controlling interest, as well as the dividend declared by a subsidiary company, 40,000 into 40% is belongs to me, NCI, right? That I need to be less. Then what I'm going to get? 4,33,600 is the, what is that? Non-controlling interest portion. Now, I'm going back to the parent company other equity. That's most important thing, because it will only confuse us to make mistakes while preparing the consolidated balance sheet. Now, if I see other reserves and retained equity in the balance sheet of the P Limited, my dear Manikanda, you come back to the balance sheet, you see what is there. Subsidiary company, retained earnings and other reserve. Other reserve is 2 lakh, retained earning is 1,64,000. Am I right? Yes. Yes. What is there? Other reserve 2 lakh and retained earning 1,64,000. These two figures for Krishna Limited. Whereas if you come to the parent limited, other reserve 6 lakh, retained earning 1,14,400. Now, I am going to talk about whom? I am going to talk about my parent company, other equity portion. I am not going to talk about subsidiary company, other equity thing, because I am not going to incorporate others and reserve surplus portion. I am going to straight away how many equity shares I issued. Yes, it comes to my balance sheet. And how much paid goodwill? Yes, it comes to my balance sheet. How much net assets portion I arrived? Yes, all assets and liabilities other than equity and reserves and surplus come to my balance sheet. Yes, am I right? Yes, it's came to me. That's why now I am worrying about my. Anyhow, I am adding to the NCI. No, NCI. I given no fair value of date of fair value on the date of acquisition and share of the post acquisition profit and any dividend declared I reduce. I given impact, right? Now I need to worry about my parent company other equity. There if I go, according to my balance sheet, what is showing amount? Other reserve 6 lakh, retained earning 1,14,400. Now I am coming back to the now. Now other reserve 6 lakh, retained earning how much is showing? 1,14,400. Now, what is my share of the post acquisition of the profit? I said, right, what is my post acquisition of profit? Already we computed 67,000 available. In 67,000, what is my portion? 40%. How much? 40,200. I am going to add back that. As well as dividend is declared by subsidiary company, right? Is declared for where? From where? From where? Yes, post-acquisition profit. And then what my percentage I lose? Then 40,000 into 60%. 24,000 is pertaining to my post-acquisition profit. I need to reduce. Then my retained equity is coming down to 1,30,600. Now my other reserve 6 lakh plus 1,30,600. Then together 7,30,600. Yes. Next of this sum, nothing. In consolidation, what is bombastic? What is the main thing is we need to understand and give impact of all adjustments regarding to the fair value of assets and liabilities and any dividend or any plant and machinery. Whatever you need to give impact into post acquisition. You need to give impact into the nothing. 3 securities premium, general reserve, other reserve. These 3 columns you are going to put opening figure, and these all adjustments is done to the post acquisition or pre acquisition. Whatever happened, you need to give impact into the securities premium, general reserve, other reserve. Now, after you giving impact, you thought that the date of acquisition is the middle of the year or beginning of the year. Beginning of the year, no worry. If it is the middle of the year, these post-acquisition profits pertaining to till the date of acquisition from the financial year beginning, those you need to bring into the date of acquisition column. Remain you put into the date of post-acquisition column. Okay. Whatever you brought into the date of acquisition column is coming into the net assets of the subsidiary company to assess, evaluate value of fair value of your net assets of the subsidiary company. Then whatever coming into the post acquisition, again you need to segregate what is the parent portion, what is the non-controlling interest portion. These two how will help you while computation of the parent company other equity to the reserves and surplus. I need to add back post-acquisition profit as well as a dividend. What is the portion I lose into my acquisition profits that I need to give impact, as well as non-controlling interest, the date of acquisition, net assets into percentage of the non-controlling interest, and for that I need to add back post-acquisition profits. These I'm going to give impact to the consolidated balance sheet. Fine, my balance sheet will tally. No more doubt. So, my dear friends, this problem is over. There is no much more to talk about. Remain all things and just add back. All assets you need to club and put into the respective column. Only tough thing is you need to understand the purchase consideration. If any is going to be payable in the future, you are going to give any commitment in the future. That future value you need to bring into the date of acquisition, and then you need to put what is the value into that. Then you will understand the significance of the future value and bring into the present value into the purchase consideration, as well as in case he has gone up, for that difference payable, you need to also consider as interest which is payable. That interest portion is going to put into the current liabilities. That also important, my dear friends. I hope this problem you understood well. And then I'm going to read your comments. Then next problem, next video, my dear friends. After some time, I'm going to bring next video, next problem. Thank you and all who are blessed me, who are watching my video. I'm so grateful to you. My dear friends, I am bringing this video not for any commercial purpose. I'm solo sharing knowledge. I'm solo sharing knowledge. My dear friends, there is no commercial activity in my teaching. This is my passion to share my knowledge, what I know as being an advocate. I'm not a chartered accountant. I'm an advocate, but passionate about knowledge, sharing sharing thoughts about the video. Thank you and all.